If you have ever said, why does the market reverse the moment I enter? Or why do I hit stop loss again and again? Then this video is exactly what you need. Today, I'm breaking down the 5 most painful intraday mistakes traders make and how to fix them. Fix just one, and your results will noticeably improve. Fix all 5, and trades will finally make sense. Before we start, let me tell you something honestly. Intraday is not difficult, but intraday trading without rules is financial suicide. Most beginners don't fail because the strategy is wrong, they fail because their behavior is wrong. Even when I started, I blew up 3 accounts, not because I didn't know strategies, but because I didn't know what not to do. Well, by the end of this video, you will know exactly what to stop doing and what to replace it with. Well, mistake number 1, entering without confirmation. Most beginners enter simply because price reaches a level, support, resistance, moving average, VWAP, and they assume it will reverse from there. But markets don't react levels. They react to what happens after price touches a level. For example, price touches support, beginners buy immediately. Price touches resistance, beginners short instantly. Or RSI touches 30 or 70, beginners expect reversal without checking the price action. A level is just a doorbell. Confirmation is the person opening the door. Many of you are entering before the door is opened. I will explain confirmation types. Number 1 is like break of structure, or you can see the candle which is engulfing, or you can see the wick which is having a rejection type, or also you can see the volume spike, and also you can see the price doing the retest and doing a continuation. Before entering, always ask, has the market proved the move, or am I guessing the move? If guessing, don't trade. Well, mistake number 2, overtrading. Overtrading usually comes from emotion and not strategy. You miss one trade, you feel pressure and to take the next one, and even after setup is bad, you take one small loss, you chase to recover. Or you take one small profit, you take another trade because you are excited. So overtrading feels like productivity, but it's actually self-destruction. Trading more doesn't create more accuracy. It creates more randomness. Every trade you take without a reason is like handling money to the market. Rule explanation: max trades per day. I can say 2 or 4 or more trades equals more mistakes. One setup type or only or no random patterns. If stop loss hit twice, stock market is not suitable. For example, professionals wait for setups and beginners chase candles. Well, mistake number 3, trading against the trend. Beginners love calling tops and bottoms, it makes them feel smart. But reality is, trend is your friend. And trying to reverse it is fight against institution. You can see the higher highs or higher lows is actually the buyer's control, and the lower highs and lower lows is having a seller's control. And also the sideways range is having no control, so one has to wait there. So most beginners ask, where will the market reverse? So for that, the professionals ask, where can I join the trend when the least risk is there? If Nifty is trending up, you short because RSI shows 70. That's not strategy, that's ego. And if Bank Nifty breaks structure and continues with volume, join the continuation. Trade with flow and not against it. Mistake number 4, no stop loss or emotional stop loss. Beginners believe they can actually exit manually, but when the price goes against them, emotions take over. How emotions work? Price moves slightly, you will see it will come back. And price moves more, you will say, just little more, then it will reverse. If the price hits huge loss, then you say, now I can't exit, it's too late. So it's like not placing a stop loss doesn't save you, it only delays the pain. So need to have a proper stop placement with a logical zone, not a random percentage. Or you should place the stop loss at the previous swing level. And also you can look at the candle wick beyond entry zone, whether it's like extended there or the volatility based on at the based stop. Stop loss is not a sign of weakness, it's your seatbelt. Mistake number 5, no trade journal. Most traders repeat the same mistake every day because they never review what they did. So it's like without journal, you don't know which setups work, you don't know your win rate, you don't know when you are overtrading, and you don't know whether loss came from strategy or emotion. You cannot improve what you don't measure. So journal must include a setup name, and then you have an entry and followed by a reason for that. And then when you exit, you keep a reason for that also. If possible, take a screenshot and also write down the emotion, what was the emotion during that trade, and your remarks on how to improve also, what to improve also. So professionals actually don't trade more, they review more. Well, friends, tell me in the comments which mistake are you guilty of the most. Subscribe to get the next important useful information which I'm going to give you in my next video. And if you want to learn more, also join my Smart Trade Circle. Link is given below. Until I see you next time, take care. Bye-bye.